back. Welcome back to another episode of Take Profit Tuesdays with your host, Levon Stewart. And as always, as we talk about, as you see in the first picture of the intro of the video, if you're not able to withstand the financial markets, if you have some money on the side that you think, I want to, throw some money in this, this stock, this bond, so on and so forth, and you don't have any experience within the markets, go seek an advisor. This video may not be for you. Again, you can show love by liking, commenting, subscribing, send me your thoughts, shoot me an email. But I do want to let you know, as a disclaimer, this is not financial advice. If you want to seek a professional, someone who's licensed, who when you do give them your money, they'll take a commission for their payroll and for the company. That company is also regulated by the SCE and FIRNA. So if that's something that interests you, you could just simply Google search, the closest person with Series 6, Series 9, and I think 6-9. And that will hook you up with the closest, probably a Charles Schwab or other firms or banks or institutions. So with that being said, get your coffee, take a sip, and let's dive into it. All right. So, judging by the title, we're gonna talk about crypto. Something big happened this week, actually today. As far as news wise, it was kind of expected. We'll kind of go about it in kind of relative detail, probably not too much. Just kind of get a base of what's going on for future scenarios. This may be for those who are not in it yet, this may be a buy opportunity. For those who are in it in the long term or already in it in the past, who gone to the high, not so much good news. But anyways, so as far as updates on the trading account that we're growing, and again, if this is your first time watching this video, if this is your first time joining the stream, first things first, make sure you comment, make sure you like the video. The more you like it, the more it gets pushed in the algorithms. Again, they're trying to grow a trading team. So if you're watching this, you may see some price tags, and you're like, "Oh, Levon, what are the price tags?" Oh, so basically, what we're trying to do, we're growing an investment account, a group investment account. I'm putting my own money into it, obviously. And then you guys, if you decide to, hey, if I do a video, because I'm doing these videos weekly, by the way, so a lot of times you'll get the trade within the week. So you most likely get in at relatively good times. If not, not always perfect, because again, if you're not following the videos, hey, you'll probably miss it. But if you got into like right here on that Tuesday or whatever day, because I'm gonna be getting the day before after the videos, you could have profited. Or if you get into right here, you've been relatively profit. But what we're trying to do is to grow this account big enough to where we could do options trading, and with that I could teach you guys a little bit more how to do it. But let's get the basics down at least. As long-term traders, we can't be doing very high risky things until we're able to get there. And again, this always goes back to the 4 pillars, your psychology and risk management. So, with that being said, now the title of this video is called Trendlines Part 2. So the reason why I want to talk about Trendlines Part 2 is because a lot of times, as we spoke about before, as the price dips, it touches the trend line. Each dip touches the trend line, it goes up, so on and so forth, right? So then, during that time of the video, last week or 2 videos ago, we talked about how price could either go in 2 directions, right? What did it do, guys? Either went up, either went down. And what did it do? It went down. And I said before, if it goes down, hey, I might buy it. If it goes even lower than it did before those other buys, I'll probably most definitely get into another good position. But as you can see, it didn't really play out that way, and that's okay. That's fine. Some of you, if you got to at this point right here, hey, kudos, you did a good job. Those of you who didn't, hey, you could wait a little bit longer like me to get into a better buy position. So, one thing I do want you guys to understand, and this is relatively free, information. If we do want to get more information on how these trend lines could work in your favor, different variations, so on and so forth. We do the one-on-one scheduling, so we do it via Zoom. Shoot me a message if that's something you might be interested in. If not, we have the signal services where you have the team and the group members. We kind of give out signals to you guys. And those are the various options that we have. So I'll definitely get a part of it. It's nice to see this played out as it is. One thing I do want to see is, kind of see if we'll go even lower than it was before at this zone. So and I'll mark it out so you guys can see it too. So what I'm kind of expecting is something like this. Again, this is not financial advice. This is something I'm just expecting to happen. Will it happen? Maybe not. Could it go higher than it is now? Yes. Maybe not. Could it go sideways? Yes. Could it actually do what I said it would do? Absolutely. But hey, it goes back to the 4 pillars. Like I said, you can't really do any of these things that we're doing if you haven't mastered, if you haven't gotten the capital, if you haven't gotten a strategy, if you haven't managed your risk, and if you don't have the psychology to understand what's going on and what I'm teaching you guys. Because again, if you've just not gone to this video and you've not watched my past videos, I teach the psychology and how to withstand these. Look at those previous buy opportunities that I got. How do you think I was able to do that? I just kind of willy-nilly did, and just hey, let me just get in there, and so on and so forth, right? It kind of seems like that because at times once you master it, once you become very familiar, it can be that easy, and you could just do what I'm doing passively. So, with that being said, now, let's talk about the news. I'm gonna jump in some crypto charts, and we'll talk about crypto in a minute. So, one second. So shout out to Sam Rule. He taught us this. What stock market pros are saying about modern elections. Morning brief. So shout outs to the midterms. As far as the politics go in the United States. If you're watching the senior states. Today was your election day. Hope you want to go participate in your election. If you're a senator, representative, or what have you. I didn't really study politics. In college, I had a couple. Friends who did study it. So shout out to them too. I hope they're in the right office for the local towns. But anyways, he writes. Shout out to, by the way. He writes, millions of Americans will head to the polls in Tuesday's midterm elections to vote for their national, state, and local representatives. The stakes are high and could end with Republicans gaining control over the Senate or the House, which increases the likelihood that a little new legislation gets passed amid gridlock. Ironically, gridlock is often thought to be bullish for stocks as it removes some policy uncertainty. So with that being said, if you kind of know what's going on, things will most likely will continue to go up because, it's kind of like a positive impact, you would say, in the markets. So he continues, if Republicans do well and take back control of one or both chambers of Congress, we We see the event of a positive as a positive for the stock market until the end of the year. Laurie, head of U.S. equity strategies at that company, wrote it on Monday. We believe the October move in the S&P was fueled in large part by the shift in momentum away from the Democrats and back toward the Republican, and that we started to see polling data and betting markets that was building in August and September. So it's kind of funny perspective because we did see that one big shift, and they're kind of alluding to that because the Republicans may have a huge stake at what's going on with these elections, and might take over the House or the Senate or the Senate. All right, let's continue. Let's see. So, Michael Wilson, chief U.S. equity strategist at Morgan Stanley, agrees that gains by Republicans could be bullish, but he also cautions that there could be some near-term velocity, which is good for those scalpers out there. The results may not be clear on Tuesday night, given the delay in counting in mail-in ballots, which means we can expect price volatility in equity markets will remain high and provide ammo for bears and bulls to alike, Wilson wrote. Regardless of the outcome, Wall Street strategists are generally in agreement that the outlook of stocks is favorable once we get the midterm elections behind us. This would be in line with history, which shows the S&P 500 has generated a positive return in every 1 year period that followed midterm elections. So they're saying basically after the elections, the year following after, things are kind of bullish. All right, so we'll probably continue with this, and then we'll talk about the next one. There are a few possible fundamental reasons for the market strength following midterm elections. Mr. Gilbert and Jeff Butchman wrote on Monday, primarily with the uncertainty associated with the election is behind us, the markets don't like uncertainty. But on top of that, midterms usually provide something of course correction for the presidential elections, as discussed above, and the markets may anticipate prospects of a better policy bounce ahead, regardless of who is in the Oval Office. So they're just saying during this cycle between the shifts of power between the elections and the presidential elections in the states, that the markets relatively respond positive, kind of in the bullish favor. So this is relatively a good time if this is correct. Get into a good position now while things are low, right? Indeed, the post-term election period tends to be stronger than average. Since 1950, the average 1 year return following a midterm election was 15%, the Capital Group observed. That more than twice the return of all years during the same period. That said, that outcome of the elections represent just one favorable for investors as they think about the longer term outlook of stocks. So again, this is a relatively longer play. We talked about the short term volatility, but in the same breath, they're quote unquote they claim we're in a recession. So this would be I would say a good time to get in at the lows as we're gonna recover from that recession, right? Who knows? Our main mantra over the past decade is that what happens in Washington matters, but collectively factors outside of Washington matters more. Chief Market Strategic at that company says. So this is interesting. It's a lot of different perspective of how just the politics of how it could inflict in these markets, and how a lot of times it's kind of like out of control. This is like a cycle, a seasonal kind of thing that we kind of expect. Because in my opinion, in the next 4 years, we have another midterm. This is something we're going to also expect again, right? Even if there is a recession next year, let's say 4 or 5, 20 years, what have you, it's something that we're gonna expect to have to deal with. So now, and this is the meat. I don't want to say meat on the bones, but this is the interesting thing about cryptos now. This is what we're gonna talk about. And shout out to Brian Sozi and David Hollerith. Um, yeah, let's jump right into it. So Binance is. Oh yeah, they titled this. One second. They titled this Binance moves to acquire FTX after crypto world spat blows over. Interesting perspective. So they write Binance is pulling rank in the role of crypto constellators and the chief admin public tensions with the rival FTX. This afternoon, FTX asked for our help. There was a significant liquidity crunch. Oops. Binance CEO's CZ tweeted on Tuesday, to protect users, we signed a non-binding letter of intent intending to fully acquire FTX and to help cover the liquidity crunch. Um, we will be conducting a full due diligence in the coming days. So this is not really good for FTX because, again, if you understand how economics works with the cryptos and quote unquote